All right, well, welcome to episode 2 of the Boring Millionaire podcast. My name is James Lamantia.
Yeah, I'm Nick Polari.
And we are excited to get right into the market today. So last week when we started the episode, we mentioned that the S&P 500 was sitting at 59.90.
59, yeah.
And right now, it's at 58.75.
It did break 6, though.
It did break 6.
Yeah, that was pretty exciting.
Yeah, cute little milestone. Fundamentally, it's just nice to look at. We kind of said this last week that things would kind of smooth itself out.
Yeah, right. Everybody got excited. The victory, the market just taken off because of that. So it needs to kind of find itself and it cool off. Like it just can't always be like 0 to 100 the whole time.
Exactly. Yeah. It moves in two directions. That's up and down. And this week we saw it go down a little more. The week prior it was up a little strongly, but to say a 5% rally in the general market abroad, you don't see that often. And then when you do, we find the weeks like this.
Yeah.
But seeing a little bit of turbulence in the market, what are some of the things you're looking at?
Some of the things I'm looking at, man, I love talking about this. Right now, Disney just beat earnings. So looking at that, Visa, MasterCard,
Powerhouse,
they are, yeah. We were talking about that actually before we were filming. Visa, MasterCard, just credit companies, like credit cards. I mean, look in your wallet. You have a debit card, a credit card, it's going to say Visa or MasterCard on it.
It is. They absolutely locked the market. The two of them, they're both in my top 5 long-term positions because they're just unbeatable. It's like the credit market is never going anywhere, and it's not only the credit market, it's the debit market. It's debits and credits. Nobody has cash anymore.
Yeah, it's so convenient to just have your card everywhere. Even we were talking about on your iPhone. You have Apple Cash. You just download your credit card, your debit card on there, and then you could just scan it on any credit reading device.
Exactly, yeah. So even if you're using the Apple Pay, if it's synced to a card, Visa and MasterCard are still getting their piece of the action.
Yeah, they get all the transaction fees.
And if you look at their charts over the past forever, they're just unbeatable. They get corrected with the market. Like we said last week in 2022, that was a slow bleed bear market. We saw them get damaged in that, but picking them up in those moments is what makes a strong portfolio.
And if you look over the years, it just goes
steady.
Up. Yeah, it's
smooth.
Steady, nice. I mean, that is always a good stock to look for, something that just continual growth, slow over time. And again, like you said, you'll see dips, but I mean, you look at the overall chart over the years, it just steady inclines.
You could count on it.
Exactly.
And like I said last week,
dependable.
It's something we could sleep with in our back pocket. Some of the things I'm picking up this week, though, I can't sleep on NVIDIA. They're just the powerhouse of the computing world.
All the chips, yeah.
They do. They make, not only do they make all of the chips, but they cannot even make them fast enough. So there are such supply issues that generates some of the inflated prices we see for the GPUs and some of the other semiconductors that more of the larger names would buy. We wouldn't buy some of that shit.
Yeah, no.
But yeah, you can't sleep on them. Amazon is really getting torn apart today too. Why would you not buy it? Like, again, not to reference everything from the last episode, but this is what we're trying to say. Last week, we were saying how Amazon is a powerhouse in the world. It's something you should almost be invested in. And now today, when it's down roughly 3% in a positive market environment, that's opportunity. Like, that is the painting on the wall opportunity and what it looks like.
Yeah. Speaking of opportunity, another one I was looking at, Home Depot. I know you're going to love this story because you were warning me about it, and I didn't listen. I was young. I was naive. I was afraid to take the chance. Home Depot was trading at $150. You're like, buy, dude. It's going nowhere. I mean, it's such a strong company. I mean, it sells building materials. You ever need to remodel? Exactly. And I didn't listen. I didn't listen. I was too afraid to take that jump. It was 150. Again, that can be scary, but as we were talking about fractional shares, I could have even got in like that. I didn't. It had a lot of positive earnings. It had positive earnings this week, and it's trading at like $405 right now. So, missed opportunity.
We have to own our mistakes. We have to take accountability, but not only in a mature man, Nick is taking accountability, but in his investment portfolio, you need to take accountability. It may have been rough to watch it rally the way it has, but I'm sure you didn't let it happen twice.
No, exactly. It is a lesson. You have to take a lesson from everything you do. You're going to make slip-ups. Nobody's perfect. No one can call the market perfect. Look at what you're doing. Look at how you might have messed up, and then look how you can correct it, and look at what you can do in the future to better your opportunity. Yeah, that was a missed opportunity. Not going to let it happen again. I know I've talked to you about Apple. I mean, Apple had a slip, went from 200 to like 150. I'm not missing this again.
Exactly.
Tesla had a split. I'm not missing that. And they were all right moves.
They are. They're correct moves. Every company you had just mentioned is something that had our parents bought in the 90s. You know, we'd have a little bit of a different life.
Yeah, right.
So that's what we're trying to convey as well, is you make the opportunities and then your children will have a little bit different of a life. But speaking of things that we're buying, I do want to pride a little bit on UPRO and QLD. The ticker for UPRO is UPRO. QLD obviously is QLD. UPRO is a double weight S&P 500 ETF and QLD is a double weight NASDAQ ETF. So what an ETF is, it's an exchange traded fund. There's an investment banker, or if it's a hedge fund, whoever is under the umbrella, they manage that fund, and that fund follows the pace of the S&P 500 or the NASDAQ, whichever you prefer. There's many ETFs for many different things. You could do the medical sector, pharmaceuticals, consumer staples, whatever. I like them because it broadly follows the S&P 500 and the stock market, just generally spoken. And I like to do the double weight ones because if you're in it, you may as well get the most that you can out of it. So on a day like today, yes, the S&P is down 1.2% roughly right now. So that UPRO is, I don't have the exact number, but roughly it would be 2.4% down. On the contrary, when it's going up, it would be up to 2.4 as opposed to the 1.2 in the S&P. But what I'm getting at is it's an easy, convenient, broad way to just simply get into the S&P 500, the stock market as a whole, and then you follow it, getting a little more juice out of it than you would typically.
Also, too, since we're talking about ETFs, they're also good if you're too afraid to pick individual stocks. I mean, they, like you said, they cover broad ranges. So if you want to get in the medical sector, if you want to get into retail, you know, whatever you want to get into, tech, they have ETFs out there. I mean, do your research, but they do have ETFs out there that will cover multiple stocks that they're investing in, and it broadens it so you don't have to pick one individual stock.
It's very comfortable for people who maybe have a entry-level idea of stock picking, what's even going on. You know, once you watch the podcast, you'll have a better idea. But what we're saying is, even somebody as experienced as myself and Nick as well, we like to buy ETFs because it's kind of like the foundation under the house. You pick your Apples, your Amazons, your McDonald's, but you're still getting everything in the market as a whole. Those are some investment choices. I do want to throw a trade out there. So I am trading Chipotle, the ticker is CMG, and I'm trading it strictly on technical analysis. So what that actually means is the nerd looking into the stock charts, but I want to just show the point that you don't always need to know the in and outs of the company. And in fact, the company doesn't need to always have some stardust magic fundamentals going on. Chipotle, it fell on earnings, and it fell roughly just under its 200-day moving average, which is a year average. It equates to the same thing as 200 trading days. But whenever a stock falls under that 200-day moving average, it gives me incentive to buy. So I opened a short-term trade. It started to rally back above its fall. It fell roughly from 60 to 56. It's now just under 60. But if you look at the chart, it's following a trend where I think it's now showed strength coming back up above the 200-day moving average. It's been following the 6-month little box. I will have an image to show you. And now that it's remet its $60 price, I think in some time it's going to have a hard rally back to 68.
I do agree with that. It breaks through. Once it breaks through, I think it gives it a little run room.
It does. And that breakthrough is called resistance. So it was sitting at 60. It fell under, went right back to 60. That's a sign of strength. Now, what does it do at 60? Does it go weak and fall back under, or does it break through? Today, it's not looking like it's going to break through, but you wait a week or two. And if it fights that 60 and prevails, then yes, that's going to be a strong trade.
Also, too, like you're saying, there is overall weakness in the market today, so give it some time.
Exactly, yeah. One day, one trade, you just got to take it as it is. So I know you also wanted to bring up Tesla a little bit.
Tesla. Yeah, I do love Tesla. There's so much to say about Tesla. It just runs the market in EVs. They also are the only company that really have autonomous vehicles, so that's pretty wild. And also, since, you know, it seems like the world's trying to go electric, I mean, Tesla's leading the way.
They are leading the way. And one trend I like to really point out is Tesla was a sleeper in 15, 16, 17.
It was, yeah.
And then once it broke through, you noticed Hyundai and Ford and everybody else.
Yeah, they're all trying to make electric cars.
So to the point you had just said, they are leading the trend because they're making the market change. Other automotive companies I do like, but Tesla.
They're ahead of the curve.
They are.
I mean, not to jump a little bit, we were talking about Nightscope. Security robots, they're really the only ones doing that. They're ahead of the curve on it.
You have to be ahead of the curve, because the curve is there. And once the curve is there, it's because it's getting the mainstream attention. One thing I am very intrigued by with the recent move from Tesla stock is immediately after the election, it basically went from rough numbers 240 to 320. It's down today, but it was roughly, it even went as high as 350. But we'll call it 320 right now for the basic math of it. So that would be 240 to 320 is a 33% run upwards. But if you do the math backwards, 320 to 240 is a 25% decrease. It almost seems like the wealth tax was priced into that stock. Like we mentioned last week, after the election results, we saw that that's something we don't need to concern ourselves with. The stock appropriately went back to where it was valued at without getting basically taken from it.
Yeah, exactly like we were saying. I mean, you think like, oh, we're getting the rich, but really you're hurting the market.
You are hurting the market.
I mean, exactly like you said, they took into account what was going to be taken away from it.
And that's exactly what you said with Warren Buffett. He had the foresight to plan for all avenues. And, this is just the one that panned out. Another thing I think is very important to bring up with Tesla, we were talking about it yesterday and today, NIO stock ticker is NIO. They basically had the monopoly on autonomous vehicles in China till big dog Tesla got approved to have autonomous vehicles.
They're over there. I think it will be fun to see the competition. I am always a favor of competition. That is the only way you drive forward. That
it breeds innovation.
Exactly. So I'm excited to see what NIO will do in response. Like, can they survive? Or will Tesla take over? So
time will tell. Happens. So there's a joke Nick and I always like to say. It's a quote from Always Sunny. If you play both sides, you're always going to end up on top. Win. So I do have shares in NIO. I do have shares in Tesla. Tesla so much more predominantly.
Yeah.
They can both survive in coexistence with each other. Will one assume the other? Potentially. Will NIO come from the grave? Potentially. But that's what makes a market. And like we said just a minute ago, competition breeds innovation. It's going to make the other person want to do more to beat the other person. Yeah. Another long-term investment that I'm putting some money into is AbbVie, stock ticker ABBV. AbbVie is a pharmaceutical leader powerhouse that makes essentially every drug that we all use. And we don't even know it. Like nobody knows it. If you look at any pharmaceutical commercial on TV, you will see that AbbVie is the maker of that pharmaceutical. But it is a powerhouse stock because it fell on earnings about a week ago, and it fell from $200 to $166. AbbVie also fell under its one-year average. Strong buying signal. It's also in run with where it fell in June and May. So it's balancing out on a little bit of like a wave. It's catching itself, and I think because it's under its one-year average, it's going to just rally out. And if you look at AbbVie historically, it always rebounds. It always does. So buying right now, you're getting a low discount pharmaceutical leader powerhouse. I've held it for years and years, continue to hold it years and years.
I was looking at the chart earlier, and yeah, it has one of those steady growths. So over time, it's growing. And then right there, you have the dip. Good time to buy.
It is. And speaking of dips, we did touch on Nightscope. I do just want to go back. I know last week it looked a lot more glamorous than it may right now, but it's just more opportunity to get in.
Yeah.
It's the entry levels of an infancy company, and we need to take advantage of these discounted prices.
And like we were saying, even back to the Tesla thing, I mean, they're ahead of the curve. It really is going to be everywhere. You're going to be seeing Nightscope robots, and you're going to be like, why didn't I?
One thing I like to say, I've been in the market just about 11 years. I've been investing, and Tesla was a very real-life coming-of-age stock because I always invested in it because of what it was. I knew what it was, what they were doing. And then there was one year where we're in southeast Pennsylvania. Nobody had a Tesla. Now every single day we see Teslas all of the time everywhere. The Cybertrucks even.
Yeah, I love seeing a Cybertruck. It's funny you say that. The first year I ever went out to Colorado, I knew of Tesla. I saw the stock, but I was like, I've never seen one of these. Like, they're electric cars.
Almost like a myth.
Yeah. So I go out to Colorado, and everybody was driving them out there. Our buddy Colin took me to see the Tesla store. Like, it's so crazy. And then I come back within a year, I start seeing them around here. And then Jersey, too, in New Jersey, there's just loads of them.
Last week we joked about why would the guy buy a car when he is a horse. It's the same thing. Why would somebody buy an autonomous EV vehicle when they have a Ford 73? Speaking of trends, I want to talk about CrowdStrike. I had a very good trade on CrowdStrike. I still own shares of the company in my long-term portfolio. 2-3 months ago, they had a big data breach,
dude. That was one of the best opportunities for me. I mean, I got in, I think, right around 220. It fell from like 3 or like 310.
It was at its peak 373-ish. You know, it fell hard. It opened up for people to just like throw their money into it. You said 220, did a little better than I did. I bought it at 250. But it's trading roughly at 320-ish right now.
There's a lesson in that I would actually like to convey. That's the perfect thing on buying when it's falling. Like, you want to buy when it's going down. You're never going to call a bottom. It's impossible to call a bottom. You could get lucky, but if you're buying on the way down,
get lucky.
Yeah, you would get lucky. But if you're buying on the way down, you're in it. And then when it bounces back, you know, you're going to make your money back. So I buy on the way down.
And we
just
did.
Smarter. Exactly.
Yeah, and we both made a fantastic trade on CrowdStrike. We put some shares in our back pocket, and we also made a short-term profit on it. It's exactly what we're trying to convey, is they had the data breach. It's very, very scary PR. Stock price fell because it was terrifying. You know, the company's trash right now.
Yeah, right.
But really nothing changed. They just had
Nothing
a bad PR day.
Yeah.
You know, everybody crashes out, and that day CrowdStrike did. But we were able to make, you know, roughly 30% on that.
Yeah, seriously.
So that's
worth it.
what we talk about. That's what we convey. It's opportunity. It's capitalizing on the opportunity. And it's not being afraid. And I don't want to overspeak, but you raised another really valuable lesson in this example. You're never going to buy something at the lowest price that it is. And you're never going to sell it at the highest price that it is. But as long as you bought it at a great price, and as long as you sold it at a great price, you made a great trade.
You don't have to be at the absolute max. That just, if you keep searching for that, then you're never going to make anything.
You won't. You
really
will
won't.
destroy yourself.
But also, too, I'm excited. They have earnings next week, so I'm excited to see what they do. I'm expecting positive earnings.
I am, too. I think a lot of earnings, generally speaking, are going to be great because we're in a new environment. So the outlook would be a little bit different. Of course, you know, what they have done in the months behind that earnings report wouldn't change. But I think their outlook is going to be more positive than it otherwise could have been. And sometimes the outlook weighs more than the results that they have now. Especially that it was an election cycle. Some of these companies, 3M, perfect example. They have so much China exposure in their sales, their revenue, so much of what they do. NVIDIA is another one. The election was a big catalyst for some of these companies. So I think in their earnings report, their outlooks would be better
positive
now than they may have been, you know, with different results.
But yeah, I agree with that. Positive outlook's always good. Optimism. And like we were talking in earnings, you can have amazing earnings. But if your outlook on the future is bad, it can hurt your stock because people are losing a little bit of faith in your growth. So they pull back a little bit.
We're investing in the future. We're not investing in the past. If a company had great earnings all year, that was great for 2024. But what are they going to be doing in 2027?
Exactly.
And that's where people are putting their money.
Yeah. I mean, exactly like investing. It's about growing the company, growing your money. It all ties together.
It really does. It's all fluid. It's all liquid. It all just revolves around each other. And speaking of positive outlook, I don't think we're just going to see positive outlook within earnings reports, but I think we're going to see it generally speaking through the market. I think the days like today, the percent down days, like there's going to be very few and far between in this new environment. There's two terms I actually want to say that are generally spoken in like the Wall Street lingo. One is called animal spirits, and animal spirits just means good vibes. It means, you know, love is in the air. Everybody's feeling good. They'll put a little extra money into an investment because they're just optimistic it's going to work. And we're seeing a heightened sense of these animal spirits now after the election, after the Fed cut, positive earnings, all a recipe for a good investment meal. It's going to project us into what they call a Santa Claus rally. Every season, it seems that the stock market falls and staggers in September and October and rallies in November and December. So not only is that traditionally the way it goes, but all of these setups are pointing that it's going to be strong. I'm also very excited for January because the middle of January we'll see the next Fed meeting. They're not going to cut. That would be very preemptive of them, but they should be giving us some outlook on when they expect to cut, how much they expect to cut. I would guess 0.25%.
Yeah, I'm thinking a quarter.
You never know. But it's good to just hear them not only speak on their outlook of what they feel they may do, but also, they'll give ideas and insight into do they think inflation is still high? Is it cooling? Are employment numbers better than we expected?
Yeah, it'll help give you a general idea of the economy itself. So,
it does. It really does.
Yeah, it's something to definitely look forward to listening to.
And of course, the second major market mover in January is the actual inauguration. It's all vibes right now. He's not actually
No, exactly. That's what I was saying too, why I believe the market is having a cooling period, because it's like, yeah, he's in, like, let's throw our money, it's going to be great, but we still have a little bit until we get there.
It's supposed to be healthy. It's almost like a breathing animal. I know I have a real intricate look at the market, but it almost is an existing being that has to fluctuate like we all do.
Yeah, exactly. It finds its value. That is the point of the correction too, because sometimes things can be overevaluated. You do want to be careful in investing at those moments too.
I am typically not a fan or believer of investing in legitimate record highs, not talking about the market broadly being at a record high, but if MasterCard, it's at an all-time high right now today, I wouldn't be so inclined. I would want to just let the steam cool off, because there's always excitement in the market and there's always fear in the market. So you buy the fear and you sell the excitement. Not even sell the excitement, just steer.
Yeah.
Don't just be so excited so quickly. I'm buying all blue chips, expanding my portfolio, just really reinvesting in a lot of the core things I think are going to move forward as we go.
A couple ones I've been looking at too, if you're looking for good dividend stocks, AT&T is
absolutely
a great dividend stock. They're paying like almost 5% in dividend, so that's always good to hold. IBM, first stock I ever bought. That's a great dividend also.
IBM is a beautiful stock.
I think they're at like 6.5% around
They
there.
are, and still rushing through 52-week highs. Major 52-week highs, because it's been 12 years since they had an all-time high. So they're finally
they're making
some headway into where they should be going, but maintaining an astronomically great dividend as well.
Yes.
So the whole time we've been investing in IBM, 10 years at least.
Yeah.
And it really, truly was a $160 stock basically the entire time we've owned it. But that major dividend was giving us income the entire time.
Yeah, exactly. And I don't think it ever fell under like 120, 123. And I think that was during the COVID scare.
Which was a fantastic buying opportunity for everything.
I don't ever want to relive COVID. If I could go back and put more money in, oh, dude, that was amazing.
It was a beautiful, I will say it was a beautiful moment. For my life and the way I invest, that was a beautiful moment. We talk about stock-specific dips where CrowdStrike had a scare, data breach, the stock fell. Now, that's niche. But when there's a legitimate world crisis that the market as a whole all deflates, that's where people make their biggest money.
It's just Black Friday for the market.
It's
just day after Thanksgiving, shopping spree. It's just everything's on sale. Have fun.
And there's a political joke that people say never let a good crisis go to waste. But that is true in the stock market. For the 10 years that I've been investing, in 2014, there was the Ebola scare. In August of 2015, there was this circuit breaker scare. Market just fell 10% out of the sky for no reason. January of 2018, quick long shot bear market to the ground for no reason. There was the COVID dip. There's always just these quick 2-week little dips and back, and it's always when the world is terrified of ending
something.
But the world's never ended yet.
It's crazy, and it just brings back the point. No one can predict the future like that. I mean, you just
except
won't.
me.
Yeah, well, yeah, in the market,
in the stock market.
But I mean, like, everybody thought the world was ending. Obviously, it didn't end. Everything recovers. Everything goes back to how it is.
I had money saved up for an investment property, and I put it all into the market in March 20th of 2020. That was crazy. That's what makes people money in the market. It's just a fantastic opportunity to just expand and to just get involved and to capitalize on the fear that was presented to us.
Yeah, you always got to be looking for it. I mean, there's going to be another event. I mean, we'll probably cover it when it happens.
Yeah, we will.
It's time to go in heavy. I mean, I always have my money set aside. And that's also another thing. You can borrow against your stocks.
Yeah.
So you will be ready when it happens, but also be careful because you are putting yourself into debt. You got to know how to manage that. If you default on it, they will sell what you have. So don't take it lightly. It leaves you open for those moments, and you can jump on them.
It is. Nick raises an incredibly great point, because you don't have to have cash available, anything of that nature. If you have a marginable account, the money's there. You have to manage yourself correctly and pay your loan correctly. They will take your stocks.
Yes, don't get carried away, because that can be really bad.
But for the accessibility of grabbing it in the actual split second that you want to grab it.
It is great that they offer that, because you never know when something's at the perfect point, and you might as well jump on it, because you never know when that opportunity is going to happen again. It will happen.
They will always happen. A Brexit was one that I forgot about.
Brexit
was really hot, actually, because the whole world didn't think it was going to happen, and you should be prepared for both. And that's, something we like to express. But the opportunity came the 2 days following the Brexit. It was 10% down, and you just ate it up, and then immediately went to record highs. A joke I like to say in investing in these crisis moments is the world hasn't ended yet, and if it does, you're not going to worry about your cash and your stocks. There's more important things going on. So go for it. You have to go for it.
And if the world ended, money wouldn't have value anyway. So
right. You'll need food and bullets. You won't need the stocks. Until that day, you're going to need money.
So
exactly. Let us help you get better at understanding it. Let us help you get better at making it. And with that, we're happy to leave you off until next week.
Yeah, thanks for watching episode 2. We'll be back for episode 3 next week.
We will see you soon.